one of the silver linings for from the pandemic has been spending more time with my daughter. Working from home has allowed me to just be around her more, and to spend more time with her and to eat more meals with her, which has been nice. It's also allowed me to connect with my team and colleagues on a much more intimate level. And even my clients, the first couple of days of this, right around one of the key dates that we will discuss today in the webinar, March 12th, everybody at our firm, we just stopped everything that we were doing and we spent 3 days just reaching out to all of our clients, and everybody on their team that we've talked to and dealt with over the last, anywhere from 3 months to 8 years, to just see how everybody was doing, check in with them, make sure they were okay, and letting them know, start answering whatever questions we could. And, it's kind of continued from there, that our doors open and that they are reaching out to us with questions as they have them. And, we're there for them with all of their questions. So I believe that through all this, we're realizing we're a global community, and that we are able to connect in new and different and exciting ways, which, albeit maybe not under the greatest of circumstances, is nothing. Renee, how about you? How about your team and your crew? What are some of the blessings that have come out of this pandemic in your office and in your world?
Good morning to everyone. I think I've been really impressed by just the way everyone's come together to work so hard. I mean, we have not traditionally been a remote firm, and we're trying to get information out so quickly to our clients and to just be as proactive and in front of things as we can, and to see everyone doing that remotely and coming together to just be of service. Basically, it's just been really impressive to see. I'm so proud of my team, so grateful.
Likewise. Well, with that, we'll get started. Thank you to the Better Business Bureau of the Pacific Southwest for having us and for hosting this webinar. We're grateful to be here.
Yes, thank you everyone for attending today. Just so everyone knows, our webinar is being recorded, so if you do have to leave, it will be posted on our website a day after or two. You just go to events.bbcommunity.org to access that. And if you miss any of our other webinars, or if you want to sign up for other webinars coming up next week, those are all available online as well at events.bbcommunity.org. I do have a couple of call-in attendees, so if you called in on your phone, you can also access these webinars. Just go to that website as well, so you won't miss anything just because you're just listening in. My name is Faustine Chan. I'm the Business Innovation Manager for BB, serving the Pacific Southwest. So I help coordinate these webinars that we've been holding daily for all of our accredited businesses and all the business community, just to help you get more understanding of what's going on. There's a lot that's going on, whether it's taxes, scams, loans. So we have a lot of variety of topics just to help you get through this time right now. So it's definitely something that we've never experienced before, and we'll definitely navigate it together. So we've already kind of get an introduction, Alexandra, but I'll let you guys introduce yourselves. You both have your law firms there if you want to just briefly mention what you do there and some of the things that you're passionate about.
Sure. My name is Alexandra Eaker Pérez, and I am the founder and a shareholder in the firm Eaker Pérez Law. We're exclusively a tax law and tax controversy firm. We practice civil tax litigation and criminal tax defense exclusively. These are a few of the types of matters that we handle: EDD, worker employment tax and worker classification audits, payroll tax issues, whether through audit or some type of civil sometimes not civil, negotiated agreement with the government and state tax agencies, tax settlements with the Employment Development Department, Internal Revenue Service, California Department of Tax and Fee Administration, Franchise Tax Board, and Texas Comptroller's Office, IRS Audit Defense, Sales and Use Tax Audit, Representation and Settlement and Appeal, and then General Tax Litigation and Criminal Tax Defense. Been doing this for a while and have appeared in court quite a few times on these types of matters. And then this is a sample of some of the things that I do in the community in order to, give back to the community. And I've won a few awards. And Renee, my co-presenter, is a phenomenal employment law attorney for businesses. Renee?
Thanks, Alexandra. We are an employment law firm, a boutique law firm with a focus on helping companies create what we describe as work communities, founded on, yes, compliance, but also kindness and leadership and relationship, because we truly believe that the combination of those features in a work community can prevent litigation, can keep companies from being sued, in addition to obviously making for more productive and happy employees. And I do want to say that particularly in light of everything that we're going to be talking about today, and something that's resonated so powerfully for me in the last weeks that we've been handling these issues, who you are today and how you behave in these difficult times toward your employees is every bit as important as the decisions that you make. It will be remembered, and it will make the difference, I believe, in which companies will thrive and have loyalty. Just encourage everyone to bear that in mind. Of course, you probably all know that, but just a little reminder of that as we move forward. So our firm is specialized exclusively in employment, and we do both counseling and litigation.
So our agenda for today is we'll outline recent legislation, discuss options for business, and then also discuss future business considerations based on the changes that are coming out. I want to give a disclaimer before we start, and I think I speak for, well, I can only speak for myself, but I would imagine Renee would echo my thoughts. This law is developing quickly, and as of today, it is not fully developed. So Mnuchin, the Treasury Secretary, he initially last week, when much of the legislation that we will discuss today, he had promised that IRS and Treasury regulations, guidance, and FAQs would be promulgated this week. Well, it's Friday. It's Friday at 11 a.m. And yesterday afternoon, he updated that they were hoping by Monday. So we do not have the full and complete picture of what is being rolled out in terms of the legal aspects of it. We're going to give you the information that we know, and we're going to give you information, the best guidance that we can. Know that this is ever evolving, ever changing, and will be updated further specifically on Monday, but I would imagine there'll be a few more rounds of updates that go on probably throughout the entire year 2020. Some of these laws that we'll discuss related to payroll taxes trigger 2021 and 2022 events, and I would imagine that further guidance will continue to roll out for the next 3 years. This is a significant amount of specific legislation. It was drafted very quickly, and it was drafted on a short and reduced staff. Congress is a body of, congressional members of Congress, and their staffers are human beings, same as just like the rest of us, who are also dealing with significant health and family issues at the moment. So this was drafted quickly with a limited workforce, and will likely be an ever evolving body of law as much as going on 3 years from now. And with that, I will start with background, and Renee will start us off with her very, very wonderful and experienced background, specifically in labor and employment law related to businesses.
I'm going to move through this fairly quickly because I think we have so much to cover today, but this is just the backdrop of the FFCRA. The first part of it is the Enhanced Family and Medical Leave Act provisions, effective April 1, no irony there, and through the rest of the year. And it applies to companies with 500 or fewer employees. Be mindful that there are already cities that are starting to implement, talking about implementing similar policies for larger companies, so stay tuned on that. There are exemptions available for certain kinds of leave obligations for companies that are smaller than 50 employees. The EFMLA applies to, or is available for employees who have at least 30 days of employment, and it's somewhat limited. It's available for employees who are unable to work or telework because their child is out of school due to a closure. So that is the single basically purpose for it. It's up to 12 weeks. The first 10 days are unpaid, but the regulations are really quite clear. The whole interaction of the EFMLA and the emergency paid sick leave emergency paid sick leave is intended to cover these first unpaid days. You probably all know the amounts that you're required to pay to an employee who's covered by one of these. It includes, excuse me, reinstatement, just like the traditional FMLA. Employers are eligible, which Alex is going to talk about quite a bit, I think, for the payroll tax credit for the amounts advanced towards sick leave. You're prohibited from discriminating against an employee who exercises their rights under it, and you are not necessarily required in the same ways to have a written policy, but highly, highly, highly recommend that you do that. And then the Emergency Paid Sick Leave Act, same eligibility dates, same thresholds for coverage in terms of employer size, also covers public agencies. It's immediate, and it's in addition to any benefits that the state provides, the local government provides, or company provides. So we get lots of calls on, I'm being generous. I already have a generous PTO policy. Isn't that enough? I do sick leave. It's wonderful that you do all those things, and those are in addition to what you would be required to provide for an employee who's eligible for paid sick leave. We got regulations this week that have given us a lot more information. I can't possibly cover all of that today. Just so you know, these are the 6 categories of employees who may be eligible for paid sick leave. One of the most powerful, I think, changes that we saw in the regulations, or the most significant one, has to do with bullet point number 1, which is that employees who are quarantined by the governor's order might be eligible. There was a question earlier as to whether the governor's order was enough to create eligibility, and we got clarification that indeed it does. But at the same time, the eligibility for paid sick leave has been narrowed quite a bit by the regulations that were provided. So a lot of detail there, which I'm happy to provide folks offline. But that one to me is a significant one, because even if an employee can't work because a company is effectively shut down by the stay-at-home order, the reason the employee can't work has to be one of these reasons. And if there are other reasons, like a company's having financial challenges, that's not going to make the employee eligible for the sick leave. more importantly, it means the company is not going to be eligible for reimbursement. So you really need to get your arms around which employees actually are eligible under the law, because when you go to reimburse, if it wasn't an actually covered reason, you may not be able to get the reimbursement. So just really important to understand when employees are and aren't covered, and I'm happy to help folks with that conversation. I'm not going to walk through all of it. The amounts are included in the slide, so you'll have that. This benefit doesn't carry over. An employee basically has, one opportunity to use it. You can't, if you are quarantined and you use your 80 hours and then you are sick, you don't get another bite at 80 hours. It is an 80-hour bucket. Employees have the choice to use their existing benefits or the emergency paid sick leave benefits, and they get to decide in what order to use that. Employers do have the ability to still require and should require some level of certification of eligibility. That's not quite the same as you traditionally are used to being able to ask for, but it still is recommended, and you can still require that employees follow your company procedures for requesting the time off. You're required to post the Secretary of Labor notice. There's a similar payroll credit available if the employee actually takes a sick leave that's covered by the law. And here as well, you aren't able to discriminate. These, I've just included some of the options that we're walking people through every day in terms of, what your options are for restructuring your businesses. Every one of these is going to have an impact on unemployment, on whether an individual is eligible for insurance. It has PTO and vacation implications. And so just walking through those and getting some awareness of what each decision makes, I think, is an area where we've been grateful to be able to give some comfort and guidance to our clients. And yeah, again, bear in mind that even if an employee isn't eligible for EFMLA or the emergency paid sick leave, you still may need to consider and balance other entitlements an employee might have under other laws. So for example, an employee might not be eligible for paid sick leave, but if they are presenting with a disability or you perceive them to have a disability, you may still be required to offer an accommodation that it could include time off or intermittent time off, things like that, even for employees who are not necessarily covered under the act. So just bear that in mind as you're making your decisions. I won't walk through all of them, just you'll have them in the slides for you to consider.
Thank you, Renee. So there's a couple of specific provisions under the CARES Act and the Families First Coronavirus Act that was recently passed by Congress that relate to specific tax provisions for businesses. We will not go through all of them. We just do not have sufficient time to cover all of them, but I've listed them out for you. They'll be in your materials so that you can reference them for your own benefit, for the benefit of your clients and other business owners in your community and your network. We will discuss the employee retention credit for employers, the delayed payment of employer payroll taxes, and accelerated payments of credits for required paid sick leave and family leave related to the provisions that Renee discussed earlier. We're not going to get into changes to net operating loss liberalizations, deferral of non-corporate taxpayer loss limits, acceleration of corporate AMT tax liability, relaxing business interest deduction limit, amendments to the Tax Cuts and Jobs Act that were cleaned up through the recent provisions, and then we're definitely not going to get into certain pension funding delays, SBA loan certain SBA loan forgiveness, alcohol excise taxes, or aviation taxes. We don't have time for that. I'll start first with the employee retention credit for employers. So this is a potential payroll tax credit for eligible businesses, subject to 50. It's limited to 50% of qualified wages, and it's limited to eligible employers. It is not available if someone receives funding under a small business interruption loan. If a business receives funding under a small business interruption loan, they're not eligible for this employee retention payroll tax credit. It has different rules and qualifiers for businesses with employees greater than 100, and businesses with employees of 100 or less. Both of these thresholds for 100 employees apply to tax year 2019. What that means is the rules are different for businesses who had 100 employees or more in 2019, and businesses that had 100 employees or less in 2019. For businesses with more than 100 employees in 2019, eligible wages are wages of employees who aren't providing services because of essentially business suspension or a reduction in gross receipts. Here's further. With 100 or fewer full-time employees in 2019, all employee wages are eligible, even if employees haven't been prevented from providing services at all. So it really is designed to be very broad-reaching for small businesses, very small businesses with 100 or fewer employees. It's a credit available to employers carrying on business during 2020, including nonprofits. Government entities are not eligible for this payroll tax credit. It has a quarter-by-quarter application. So for operations for calendar quarters having been fully or partially suspended as a result of government orders limiting commerce, travel, or group meetings, the credit is also available for employers who are experiencing a more than 50% reduction in quarterly receipts measured on a year-over-year basis relative to the corresponding 2019 quarter. So for businesses that, say for example, a business is in startup mode and they just started. Well, 2019, if they were, let's say a restaurant, to give the example of a restaurant, if in 2019 the restaurant was under construction, the entity was open, but there were no employees and no gross receipts, this is not going to be an available credit for a business that potentially has more than 100 employees, because when it's measured quarter by quarter to the corresponding 2019 quarter, that business wouldn't have had any gross receipts in 2019. There's also, continuing on. I get into the continuing on because we don't know how this will apply yet, but this is this payroll tax credit will be available for every quarter beginning March 12th, 2020 through December 31st, 2020, which means that this is going to continue on throughout the rest of the year, which is why I do believe further guidance on this will continue to come out. So the difference, here's the side-by-side comparison for more than 100 employees in 2019 and 100 or fewer employees in 2019. So for employers with 100 or fewer, there's all 100 or fewer full-time employees in 2019, all employee wages are eligible, even if employees haven't been prevented from providing services. It's a maximum of $10,000 of eligible wages, and the credit is 50% of eligible wages. So thus, it's a maximum of $5,000 credit per employee. It is a refundable tax credit. So I want to give some examples of how this potentially can apply throughout the calendar year, since this will be an ongoing payroll tax credit for businesses to work with through the end of this year. So eligible employer 1 paid $10,000 in qualified wages to employee A in the second quarter of 2020, which we are now currently in the second quarter of 2020. The employee retention credit is available to eligible employer for the qualified wages paid to employee A in the amount of $5,000 because that employee received $10,000, which is the absolute cap on this. To give you an example of how it rolls over quarter to quarter, or how it's intended to roll over quarter to quarter. I say intended because the regulations haven't come out, so we will see. Eligible employer pays employee B $8,000 in quarter 2, and then in quarter 3, another $8,000. The credit is available for a maximum of $10,000 in wages throughout the entire calendar year. So the employer receives a $4,000 credit in quarter 2, and the remaining $1,000 credit in quarter 3 due to the $10,000 full year limitation for all quarters. Wages don't include wages taken into account for purposes of payroll tax credits provided by the Families First Coronavirus Response Act. So the benefits that Renee discussed earlier, those are not any of those paid benefits or any monies paid by the business in satisfaction of paying the benefits of the Families First Coronavirus Response Act will not be eligible for the employee retention payroll tax credit to the employer. Wages taken into account for the employer income tax credit for paid and family medical leave are not eligible for the employee retention payroll tax credit. And wages in a period in which an employer is allowed for have a work opportunity credit is not eligible to take this payroll tax credit. So keep those things in mind. So eligible employers have to report their total qualified wages and related credits on each payroll tax return. This is where the guidance is gonna become essential for all employers, because as it stands now, we believe now, without further guidance, we'll have to clarify. But IRS FAQs indicate, and these are FAQs that are currently on the IRS's website as of, I think the last time I looked at them was 8:45 this morning. Eligible employers can help fund their qualified wages by accessing federal employment taxes, including withheld taxes that are required to be deposited with the IRS or by requesting an advance of the credit from the IRS. How we request and how any employer would request an advance of the credit from the IRS, I have no idea. There is no guidance. We are very, very anxiously waiting for guidance on how to request the advance of the credit. You know, it is a refundable credit, which triggers IRS refund eligibility statutes. But I give a lot of caution here, and I have advised all of my clients, in spite of the wonderful, wonderful way that this law reads and sounds, to continue to fund payroll taxes. Continue to fund your payroll tax deposits, because the penalties for failure to fund payroll tax deposit tend to be stiff, even with the IRS's promise to not impose payroll tax penalties or interest, most of which requires application for payroll tax deposits to be relieved from those penalties, but we will see once guidance is issued. IRS, criminal investigation, criminal enforcement, and criminal prosecution of cases. The top priority in the top 10 areas of IRS criminal prosecution of tax cases for the last 11 years has been payroll taxes. For the last 3 years, the highest area, the payroll tax criminal prosecution has been the third highest area over the last 3 years of all criminal prosecutions of the U.S. Attorney's Office and the Department of Justice Taxation Division. The top one for the last 2 consecutive years has been healthcare fraud, but payroll tax is a very, very close second. And it has been something that the government takes very seriously in terms of fraud, in terms of intentional and willful, and any intentional or willful acts to defeat a known tax obligation. I recognize that the government is doing is acting quickly and proactively to try to save and aid the benefit of businesses as much as possible. My dealings with the government when it comes to payroll taxes is be very, very careful and very, very cautious about complying with known payroll tax payment obligations and filing reporting obligations. These rules are coming out quickly. Payroll tax returns will be due at the end of this month. That's less than 30 days from now. And everyone is trying to keep up with the regulations as they're coming out. If you later discover an error on any of your payroll tax returns, amend them as quickly as possible to resolve those errors. We will, as businesses and as a resource for the business community, we will do everything that we can to answer questions and to give our feedback related to our perspective and experience. And my perspective and experience is to pay your payroll taxes and to file your payroll tax returns, any amended payroll tax returns that need to be filed. As soon as the errors are discovered, amend them as quickly as possible. And work with work with trusted advisors in human resources and accounting to help you comply with the rules and regulations. Delayed payment of employer-only payroll taxes. This is another provision that's come out that we are also further waiting for guidance on from the IRS and the U.S. Treasury. There is as part of the package deal for the delay of employer only. I want to be very clear on this. Employer only portions of payroll taxes may be delayed through with 50% payment of whatever was due and owing by the employer, paid and deferred. The first installment in 2 installments. The first installment due no later than the end of 2021, and the next installment due no later than the end of 2022. This only includes the employer portion of Social Security, that's 6.2%. Nothing else. No employee taxes may be deferred. No employee portion of payroll taxes may be deferred. I want to be very, very clear on that. Employee portions of payroll taxes is the portion of a payroll tax that is deducted from an employee's paycheck. The employer is the trustor of that money. It is not the money of the employers. It is the money of the employees to be paid to Social Security Administration and the IRS as advance payments for Social Security and federal income tax withheld. That money must, in all circumstances, be timely paid to the federal government, in all circumstances. This provision also applies to, we're expecting similar guidance to come out, and for this to apply, for this provision to also apply to self-employed individuals, but again, only to the portion of the self-employed individuals' employer portion of their payroll tax, which for self-employed individuals, there's the employee portion and the employer portion, which is generally known as self-employment tax. Family First Coronavirus Response Act the IRS, this is from the IRS's website. They're promising lots of great things. We will see how this all shakes out. It's just too early to know without the IRS and Treasury guidance and regulations, FAQs on this, to know what the procedures are and how the IRS will deliver the promises that they're making right now of fast funds, complete coverage, and relief and easing compliance and small business protection. So we shall see. This is something that right now there is a decent amount of news coverage on, which is California and misclassified worker paid benefits. There has been this has been at the moment a bit of a champion flag for politicians who are actively urging the Employment Development Department to pay out to pay out benefits under the programs, the state level unemployment and disability programs that employees are eligible for, but that independent contractors are traditionally not eligible for. So in 2000, effective January 1st, 2020, what's commonly known as AB 5, Assembly Bill 5, went into effect and became valid law. This was passed in September of 2019. And AB 5, the definition of a valid independent contractor and consultants type relationship. Renee, would you like to expound on AB 5 a little more?
Yes, I'm happy to. It's for many companies, I think primarily because they perceived it to be less expensive and in some ways more convenient. We're relying on a definition of quote unquote independent contractor versus employee that I have to say personally that there's always been a test under the law that I think many of these independent contractors already would have been challenged to, successfully fall under. But as a result of the Dynamex case and then the codification of that in AB 5, the ways in which an individual can successfully be characterized as an independent contractor have been narrowed to really demonstrating three particular factors, and of those three, the one that has become the most critically important is that the individual needs to be engaged in a business that is different from the business that is engaging them. So in other words, as a law firm, and this is before AB 5, this is with Dynamax and the ABC test, I'll use myself for an example. If I was bringing someone in to empty trash cans for me every week, that's not my core business. That person can demonstrate that they have their own business, their own website, they're operating, completely independently of me, and their success or failure is not dependent on them working for me exclusively. I'm in good shape to argue that that is an independent contractor. But contrast that with the time of the year when maybe I'm really busy or I get an extra wage and hour class action, and I want to bring in a lawyer who, works on her own just to do overflow temporary work for me. That individual is doing the work that is my core business, and particularly prior to AB 5, it would have been challenging to say the least. I would have been unsuccessful in arguing likely that individual was an independent contractor. That's the prong that I think was the most surprising to people, although, as I say, that was always in the law. AB 5 has created a number of exemptions, including, for example, law firms and other professionals. There are exemptions for business-to-business situations. They're carved out in the law pretty clearly, and so that where you fall into an exemption, you're going to find yourself reverting back, generally speaking, to the law that preceded Dynamax, which is the Sporello, or 20-point essentially test. So it isn't that it's a free-for-all. You're still going to need to satisfy the prior test, but there are some exemptions available for certain categories of company and relationship. That's it in a bit of a nutshell.
Thanks, Renee. So one of the potential issues that we see, because this is a hot political issue and it relates to recent law, is let's say, for example, in Renee's law firm example, let's go with a different example because this is the hot one right now. The hot example right now in the news and the politicians are discussing is payment to Uber and Lyft drivers for their inability to work. So unemployment claims paid out by the state of California Employment Development Department for Uber and Lyft drivers who were previously classified as independent contractors, but have now been effective 2020, January 1st, 2020, classified as employees. There are many politicians who are calling for those workers who are able to clearly demonstrate that the primary source of their earnings came from Lyft and Uber to be paid out unemployment claims during this time that they're not able to drive or work. Unemployment claims are traditionally within the state of California paid out by employers. The EDD has not issued any specific guidance, but this is something that many political representatives, many elected representatives are very vocally pushing the Employment Development Department to pay out, which will create payroll tax issues for businesses in the future who are put in this situation because a business within the state of California pays unemployment insurance for periods in which an employee would be covered under unemployment. But for independent contractors, there is no payment of unemployment insurance. Also payments of employment training tax. And I've represented so many businesses in worker classification audits over the years. One of the hot issues within the audit is always the payment of personal income tax withheld. Personal income tax withheld is not deducted from payments paid to independent contractors. Personal income tax withheld is deducted from the payment of wages to an employee. Within a worker classification audit, the EDD invariably will assess payments for personal income tax that should have been withheld by the employer. Well, for an individual who is issued a 1099 as an independent contractor, that individual then bears the burden to file and report their 1099 earnings through their own filing of taxes and payment of their own personal income tax. So resolving those issues within an EDD audit is always complicated and must be addressed, as well as the calculation of tax. How this will be handled, we will see. We will wait for guidance to be issued. But right now, Lorena Gonzalez she's had several interviews and social media posts actively advocating that the Employment Development Department pay out employee benefits to misclassified workers that have been reclassified and recharacterized as of January 1st, 2020.
Alex, I think something interesting also that's going to happen is as employees newly transformed into employees are filing for unemployment. As you and I discussed, the federal government is giving the state money to add EDD workers to help with this. There are going to be a lot of those folks with a little bit less to do once some of this calms down. And I think, as employees are reporting, prior employment, and there's going to be this big gap or this indication that actually, up until last year, they were independent contractors. My concern is that people who might not have been on the EDD's radar are going to get on the EDD's radar as a result of these claims being filed.
Agreed. I anticipate that in 2021, 2022, and 2023, many of these I wholeheartedly agree with you, Renee. Many of the recent wave of hires from the California Unemployment Department who are hired to help process this, massive influx of unemployment claims may then be transitioned into other places within the agency, including worker classification auditors to go through and systematically audit businesses, who now may have had highlighted worker classification issues.
Good times.
Fun stuff on the horizon.
Ugh.
One of, as we're starting to round the bend and wrap up, one other fun thing on the horizon that I cannot stress enough: be very careful how you handle your payroll taxes. Be very, very careful how you handle your payroll taxes at this time. Law enforcement for payroll taxes is and will continue to be a high priority. And you just, no business wants to be on the radar of a criminal investigation case over tax, money laundering, fraud. It's not a good place to be once a case is opened. Albeit while you can have a case closed civilly, once a criminal investigation is opened, you now have an agent who is working the case who has to justify their hours to their manager, and that person's manager has to justify those human resource hours spent on investigation to their manager, and all the way up the ladder to Congress. So, agencies are, governmental agencies are organizations that function on a budget, very similar to a business, and everybody has to justify time and hours spent, payroll costs, allocation of resources. Be very, very cautious about continuing to fund payroll tax deposits, especially. There are no exceptions for any business to withhold employee payroll tax deposits. There are none. We are waiting for guidance. Do not make any hasty moves. We are waiting for guidance. Wait for the guidance to come out. For me, at the end, I'm happy to discuss any specific questions with people as guidance is issued. Don't withhold payroll tax deposits. I just can't stress this enough. Law enforcement takes this very seriously. The Justice Department, you see this subheading here, because it is a high priority item for the Justice Department. It will continue a high priority item for the Justice Department. And then developments are coming. IRS ordered office evacuations on Monday. Most IRS offices are now closed. There are some people still answering the phones and still working in different parts of the country, but it's few and far between, and it's getting more and more inconsistent. And then Munchin may issue more guidance on Monday. I put a question mark because they said it was coming this week. It's now not coming this week. It may come on Monday. We don't know when this law will be fully and completely packaged up to ensure the promised seamless compliance for small businesses. I don't have a crystal ball, and our world is turned upside down at the moment. Seems like a good time to open it up to questions. If anybody has any specific questions or general questions, Renee and I are happy to be ready for you.
So we do have one question. I think it's AJ asks and states that he is a small printing business with 6 full-time employees. They're partially open, providing essential services such as notary. I want to continue paying at least 30 hours weekly to all my employees, even if they don't work as a business has dipped completely. What do you recommend I do to get a relief from paying payroll taxes and rent expenses? My landlord is not willing to give any relief.
First and foremost, I recommend you apply for the SBA loan and go through that process. That is my first and foremost recommendation to everyone. Apply. Do all that you can to apply. AJ, did you have your 6 full-time employees in 2019, or has your staff changed in 2020? I think for AJ, depending on how he stands with an SBA disaster relief loan and the outcome of that SBA disaster relief loan, he should next really review the information on the employee retention credit for employers, because if he does not receive the SBA funding, then he could potentially be eligible for the employee retention credit to employers. But if he receives the SBA disaster relief loan, then that might, once that loan, if that loan is funded, provide him some relief for rent.
Looks like
if I could
AJ.
just
Oh,
pop in on that, just I know it wasn't part of the question, but depending on the percentages of cuts in employees' hours or compensation, there also might be some entitlements to the employees through unemployment or through the work sharing program through the EDD. So those are just be creative too in ways that you might. Ironically, there are ways in which actually you could help the employee more by furloughing them than you are by keeping them active. And it's just worth exploring those options so that they may have the same benefit with less risk or damage to you.
so AJ did respond saying that his business has been operating for over 10 years. So. We have a question from Susie. In regards to the sick pay, how do we determine if an employee qualifies for the sick pay? Example, an employee calls out due to a sore throat. Employee goes to the doctor and is determined he is okay to come back to work and presents a doctor's note. Do we pay the employee for the days off?
Well, if you have the answer is it depends. Certainly if you have paid sick leave or a PTO policy that covers that, then the employee would be eligible under that. The employee might be eligible under the EPSL, yes, because they were seeking, in the process of seeking a diagnosis. And if they missed time for that purpose, then the time that they actually missed seeking the diagnosis could be covered by EPSL. We need to know a few more facts about the business, but yes, it could be covered.
Looks like we have room for a couple more questions. So if anyone else has any questions, please go ahead and type them in the chat box or the Q&A. Just to let everybody know, I know that we covered a lot of information today. We went through it very rapidly. So some of the information that we didn't cover, we will host another webinar either with Renee and Alex here. Hopefully they can share some more information with us as those things are getting updated, or we can find another speaker as well. And then next week, we actually have a couple of great experts in the community going to talk about some of the loans that they talked about for businesses. We have someone from a banking industry from Desert Financial, and then we also have someone from the SBDC that's going to be talking about those business loans that we just kind of briefly went over today as well. So,
also as a resource for folks, if it's helpful, for better or worse, about every 3 days we've been sending out newsletters summarizing the law with a lot of practical detail. And my email address is not on the screen, but if you go to our resources page, it's www.svclegal.com. And if you go to our resources page, you have access to all of our newsletters that should help, maybe give some guidance to the extent you have questions.
and we can send that link out too as well, Renee, when we send out this link. So,
Thanks.
Okay, I think no one else has any more questions out there. We'll give it another minute. But thank you everyone for attending. I appreciate you taking time out of your busy day. And also thank you to both of our speakers, Alex and Renee, for sharing your expertise and taking time out of your busy day just to educate us and keeping us updated. As business owners, there's just so much going on. It can be overwhelming, of course. We don't know where the resources are and where to go. So we thank you for sharing that information with us.
Oh, it's our pleasure. My heart goes out to all of you. It's like drinking from a hydrant. It's just so much, and whatever we can do to support, we're happy to do.
Absolutely. Change brings with it a lot of stress, and stress isn't good for the immune system. So anything that we can do to ease the strain of ease the strain and stress of all of the change that we're all experiencing in our world, I'm just happy to help, help businesses and help the community, and try to keep everybody, even if it is a small little thing, to keep everybody as healthy as possible. And to end on a high note, as I promised at the beginning, someone wrote in and said that one of the highlights, or silver lining in all of this for them, has been learning about Zoom and incorporating it into their business daily. I can echo that myself. Up until 10 days ago, I did not understand the functionality of Zoom, and it has been interesting getting to learn it and use it very frequently.
Yes, well, thank you again for attending Financial Friday. I hope this was beneficial for you. Please make sure you go to events.bbcommunity.org to sign up for webinars next week. And then if you want to also view this webinar again, just as a repeat to refresh what was gone over, it's also available on that website in a couple of days. But thank you, everyone. Please stay safe out there. Please be healthy and have a great weekend.